We're going to do a quick video here on SP500. We've got a daily chart of the SP500 here. This is the E-mini futures contract on Chicago Mercantile Exchange. We use it as a proxy for the SP500. You can see a 5-day moving average on here in green, a 20-day moving average in red, and a 200-day in blue. You can see we're in a bear market defined by being below the 200-day moving average. Still in a bear market on the SP500, keeps getting a little worse. And we bounced off the 200 here around August 15th, 16th, and continued to sell off here heavy this week. If we take a look real quick, we can see this price is below the 200, below the 20, below the 5-day moving averages, and so we're definitely in a bear market. We made some new lows here on Friday and put in a low on this contract, 36.60, and your previous low back here, June 17th. 36.39. That's your next major support level. It's very, very debatable whether that's going to hold. If we look at a weekly chart of this, we can quickly see that we're approaching support here at the 200 week moving average level of 35.81. As you can see, it hasn't really respected it too great in the past. It respected it here back in December of 18, but not great here. But this is a better target, I think, to keep a close eye on here. This would have been the end of this week. The number would have been 35.81. So right around in the 35.90 level is definitely a place we should be looking at starting Monday morning and see if it holds. If it gets through the previous low that I'm going to go back to and show you in a minute. If you take a look on the moving averages, again, this is a weekly, so this is a 5-week moving average in green and a 20-week moving average now. You can see that we're still in a bull market on a weekly setup here, but we've rolled over in the 20. We've got a downward trend on the 20 and a downward trend on the 5-week moving average. So not in a ridiculously bad position here, but and again, still in a bull market on the weekly, but not in a great situation for holding this June low of 36.39. My guess is it's probably going to break that. It may not. We got a higher high here on the weekly, so we're just going to have to wait and see. But I would not, looking back here, I would not take a break of this low as that big of a negative sign. As you can see, we went deep into the bear territory down here and came right back roaring up. So this is the weekly support line to keep an eye on, which is more important than the daily. 35.81, probably in the 35.90 range. As we get back to a daily chart now, you can see we're going to hit this probably this week if this June low. If we continue down, which almost certainly we will. If we get a break of this June low this week of 36.39 on the futures contract, then you can look for a move down to that 35.90. That would be your next reasonable support level. There's not a whole lot going on in support on a daily until you get to about 32ish, 31.93, 32. But this is very weak support down here. You need to get all the way back down here to catch some real support in this contract, and that's way too low for us to contemplate right now. That's 21.74. So first support here, about the 36.30 level, and the next support 35. Let's call it 35.90. Let's go down and take a look at RBAM research. RBAM puts out algorithmic generated prices every morning before 7 a.m. Monday through Friday. We have 190 stocks here. Let's go down and take a look at our proprietary trend following system for SP500. This is a little bit different system we put out as a bonus for YouTube viewers. This is a 30-day trend following system. These algorithmic prices up here are not trend following. These algorithmic ones are trend following. You should see it shows short for Monday morning, the 26th, for the SP500 at 37.83 as the signal. This is for entertainment purposes only. You have to use your own analysis, but it is showing a short for the S&P 500 for Monday. Again, this is a 30-day hold, so you would, if you took a position, you would hold it for 30 days, close it out at a loss if you didn't take your profits sooner. So you always take your profits as soon as you get them, or close them out, worst case, at a loss at the 30th day under this particular table that I'm showing you. These prices up here are a little different, and you can tune in Monday morning. We will have, I'll show them here right now, we will have, these are Friday's SP500s, but we will have our traditional algorithmic trading prices for SP500 updated for you by Monday morning, 1, 2, 5, and 10 and 20 day hold periods. Same thing, you take a position, assuming your own analysis says it's a good idea, close it out at the end of 1 trading day at a loss, 2, 5, 10, 20 trading days at a loss, or take your profits sooner if you get them. That's how these algorithms work. But these will all be up for you Monday, refreshed for the 26th, Monday morning. And the trend followings are, again, proprietary. We show just on YouTube. You can get all of this absolutely free, no credit card required at rbamresearch.com. We cover 190 stocks, the major forex pairs, BTC crypto, SP500, as I just showed you, crypto, crude, gold, and T-bond futures, all available before 7 a.m. Monday through Friday. You can follow the link in the description to rbamresearch.com, put in your email, and get them absolutely free. If you like this video, please click the like button. If you want to subscribe, please do that as well. We'd love to hear comments from you about our moving average analysis, and keep in mind, all of our analysis and all of our entry prices are for entertainment purposes only. You can't use them for anything other than entertainment. And you should do your own analysis, of course, and you definitely trade at your own risk.